The Paycheck Protection Flexibility Act of 2012, H.R. 7010, or just the PPPFA for short, was recently signed into law by President Trump and gives borrowers additional time to qualify for forgiveness and eases some of the restrictions on how much of the forgivable portion of the loan proceeds must be used for payroll costs. Now, these changes come just days before the initial 8-week covered period ends for some of the PPP borrowers. Hello and welcome to Stephen Carlson Show. I'm Stephen Carlson. I'm a tech entrepreneur, author, YouTuber, real estate investor, and I'm even a volunteer paramedic. Please make sure you check out Webull with the link in the description below. Opening your account with $100 gives you 2 free stocks, with one of those stocks being valued up to $1,400. Doing so really helps this channel and I appreciate it. Thanks. The PPP revision that everybody has been demanding has been signed and fixes some of the problems in the CARES Act. This 3-page act is basically just an expansion of the forgiveness period from roughly 8 weeks to 24 weeks from the origination date of the loan, or December 31st, 2020, whichever comes first. Now, this expansion ensures that pretty much all borrowers will have sufficient time to qualify for forgiveness. Taking this loan, converting it into a grant. It is essential to note that the congressional intent for H.R. 7010 was released at the same time with the PPPFA. And they confirmed in that document that this extension should not be construed as a permit for the SBA to continue accepting applications for the PPP after June 30th. Now what this means is the current legislation, the PPP application deadline is June 30th. Nothing changes. And any borrowers intending to participate in this program must have already submitted their application before then. But honestly, I'm pretty sure that with all the current backlog of PPP loans at some banks, they're going to run out of money long before June 30th. So sadly, if you've not already applied, your chances, they're pretty slim. Now, of course, it's still worth applying. If you haven't already done so, there's a small chance you might be able to get the funds. Now, I recommend you try with a local community bank as they have had much better success than some of the larger national banks. The updated legislation requires only 60% of forgivable expenses to be allocated to payroll expenses, as opposed to the original 75%. Now, this doesn't technically change the requirement under the SBA's first interim final rule that at least 75% of the loan must be used. But honestly, you could probably ignore that rule because I'm pretty sure the SBA is going to come out with new guidance to lenders that conforms with the guidelines within this new legislation. Now, these changes come weeks after outcries from industries that have seen their revenue completely plummet as a result of the illness, which has reduced their payroll costs, and many employees were either laid off or furloughed. But that didn't impact their fixed costs such as rent or interest. So now they have up to 40% they can apply towards their fixed costs and only 60% must go to payroll. Another critical change in the PPPFA is giving borrowers whose loans are not forgiven 5 years to repay the loan instead of just 2. Now, while this change is immediate for new applicants, current borrowers can only get this extension if both they and the lender agree. And that's going to be pretty interesting to see if lenders actually agree to this or if they drag their feet on giving you the extra time. Now, this extension in time is significant because any amount that is not forgiven, possibly that 40% used for fixed costs, is still owed back to the bank. After all, it is a loan. So 60% may be used for payroll and is forgiven. The other 40% you're still going to owe back to the bank. So adding the extra 3 years to the term may be critical for some so they can rebuild their business without having to worry about paying it back quickly. Now, a super simple example here for you is if you take out a $50,000 PPP loan at 1% for 2 years, and for argumentative sake, let's say that 60% of the loan was completely forgiven. That's $30,000. You would still owe $20,000. So in this example, your monthly payment would be about $142. However, with this 3-year extension, your payment would drop down to about $512 per month. Now, of course, because you're paying it back over a longer term, you will end up paying a little bit more in interest. But depending on your business finances, this may be a big deal. Now, luckily, the interest rate has not changed. It's still fixed at 1%. Now, what this law does not do is add any additional funds or increase the stimulus package to include a second round of PPP funds. And, honestly, I kind of have mixed feelings about that. I appreciate the simplicity of the Flexibility Act. Remember, it was only 3 pages. And it was designed just to fix a few of the problems in the CARES Act. It was never intended to be another stimulus plan. So right now, we're awaiting the Senate to come back into session and begin working on what we all suspect and hope will be a second round of stimulus. Now, there have been a lot of proposals and rumors of stimulus packages, but still, right now, they're either just rumors or wishful thinking from certain politicians without any real sizable bipartisan support. Now, unfortunately, in the absence of any real news to report, several YouTubers have switched from producing 1 or 2 very well-researched videos per week to cranking out dozens of useless clickbait titles. When you look over their channel and see 4 or 5 videos posted in a single day, all basically saying the same over and over, it begins to get really annoying. Seriously, there's only so many times you can rehash the same information. So for those YouTubers out there, meet Kevin, what you're doing is a severe disservice to your viewers. Now, in my videos, I will try my best to keep my content to the facts that we know at the moment, and not just pounce on every single rumor just to generate more clickbait videos. All right, I'll get off my soapbox now. As I have said, there are tons of rumored stimulus ideas running around. And while nobody's really sure what the final legislation will be, here are a few of the ones that I think are good ideas. Number 1, because the first PPP funds were calculated at 2.5 months of payroll expenses, yet many businesses have been seeing 3 or 4 months of partial or even complete shutdown, my proposal would be to include a second round of PPP funding. This would be a completely streamlined approach and would be given to all businesses that received the first line of PPP funds. So any of those ones that had it, instant approval for a second round of funding. Number 2, a 50% payroll tax credit across the board for the calendar year 2020. Now, this would be both for the payroll taxes paid by the employers and for the employees. Businesses could start paying 50% of the rate immediately on the date of the proposed being signed, and a retroactive credit from January 1st could be deducted at the end of the year on the business returns. With the same rules for employees, they would be obtaining the immediate credit in their paychecks, and a retroactive credit would be applied when they file their 2020 taxes. Number 3, consumer entertainment and recreation tax credit. To encourage more people to go out to movies, theme parks, restaurants, hotels, etc., a 15% tax credit for every dollar spent, up to $2,500 per person. Number 4, Bring America Back to Work, advanced tax credit. Any employed American who went back to work or has maintained work during this pandemic would get a $400 per week stimulus tax credit for 3 months. Now, to be eligible for this advance, you must be employed from an employer that withholds payroll taxes. So, self-employed, you wouldn't get this immediately, but you'd be able to apply for the credit when you file your taxes. Now, these are just a few of the ideas that I personally think, and remember, I'm just some dude on the internet, but these are the ones that I think would be the best for the next stimulus. Let me know what you guys think. Comment down below. In today's video, I want to give a shout out to Aubrey Janik. Throughout this pandemic, she has been uploading amazing videos showing all of the ins and outs of the SBA EIDL nightmare. So check out her channel and let her know that the Stephen Carlson Show sent you. Thank you very much for watching. I really appreciate it, and I'll see you on the next one.